If you are a U.S. freelancer earning $150,000 under a single-member LLC, you are likely handing $35,000 to the IRS that you do not actually owe. Most digital nomads think the Foreign Earned Income Exclusion is the only way to save money. But in 2026, savvy earners are decoupling from the U.S. tax system, entirely using territorial jurisdictions. By the end of this video, you will know exactly which 7 countries let you keep 100% of your remote income. Subscribe. New Nomad Finance strategy drops every week. In 2026, the global tax landscape has shifted. Unlike 2025, when many countries were tightening rules under the OECD BEPS framework, a handful of nations have doubled down on attracting remote talent. 2. A territorial tax system is your ultimate weapon. It means the country only taxes income earned inside its borders. For a U.S. nomad earning $150,000 remotely, this is the key to legally avoiding local tax on your US-sourced wages or business profits. According to the Tax Foundation, even as U.S. import prices rose by 7 percentage points earlier this year due to tariffs, your biggest overhead remains your tax bill. Tax Foundation, 2026-03-03. If you are using the FEIE, which excludes roughly $130,000 in 2026, territorial countries allow you to shield the remaining overflow income from being taxed by your host country, or chief. Panama remains the gold standard for territorial taxation in Latin America. 3.5. Their tax code is explicit. Foreign source income is 0% taxed. Whether you are running a Wyoming LLC or receiving a salary from a New York firm, Panama doesn't want a cent of it. 2.3. However, heading into 2027, you must watch the new residency requirements. According to recent Fregomen reports, several countries announced minimum salary changes on May 8, 2026, making some popular visas harder to qualify for. Fregomen, 2026-05-08. Panama's infrastructure is top tier for nomads, but the cost of living in Panama City has climbed since 2025. 5.6. It is no longer the cheapest option, but for legal certainty on your dividends, interest, and remote salary, it is hard to beat. If Panama feels too corporate, look at Paraguay. It is often called the Switzerland of South America for its ease of residency and territorial tax stance. 7.8. In 2026, Paraguay remains one of the few places where you can obtain residency with a relatively small bank deposit and pay zero tax on any income earned outside the country. 3.8. This is particularly vital for those with crypto portfolios. As of March 7, 2026, IMI Daily ranks Paraguay as one of the 20 most livable countries that does not tax crypto gains. IMI Daily, 2026-03-07. Just remember the 183-day rule. While your foreign income is safe, spending more than half the year there can trigger additional administrative reporting requirements. Yucks. A surprising new entry for 2026 is Bolivia. On May 5, 2026, news broke regarding Bolivia's pivot toward a territorial tax model, combined with crypto-friendly banking. IMI Daily, 2026-05-05. Unlike the expensive deposit thresholds required in Panama or Paraguay, Bolivia's emerging nomad pathway is designed for those optimizing on cost as much as on tax. A furnished studio apartment in Santa Cruz de la Sierra runs roughly $400 per month, compared to around $800 in Medellin, making it one of the most affordable territorial bases in the Americas. 6.10. Bolivia's new framework caters directly to those earning in US dollars, euros, or Bitcoin, and if this trajectory holds, it could become the sleeper pick for cost-conscious nomads heading into 2027. If South America feels too far, Southeast Asia offers 2 equally powerful options closer to nomad infrastructure hubs. Malaysia's territorial system is a favorite for high earners. Under current 2026 rules, foreign income remitted into Malaysia is generally tax-exempt for individuals, provided you meet certain criteria. 3.11. Meanwhile, Thailand has undergone a significant structural shift. Following the 2024 Revenue Department order, Thailand now taxes all foreign income remitted into the country, regardless of which tax year it was earned, a meaningful change from prior rules. The framing that income kept inside a US-based LLC is automatically 0% taxed in Thailand is legally ambiguous and structuring dependent. If you are considering Thailand as your base, consult a qualified Thai tax attorney before relying on any LLC wrapper strategy. That said, Thailand's latest LTR visas remain attractive heading into 2027, especially for those in tech and remote work earning over $80,000 annually. Georgia, the country, not the state, remains a compelling option for European-based nomads. Their territorial system is straightforward. Income from a foreign source is not taxable for individuals. If you register as an individual entrepreneur in Georgia, you might pay 1% on local turnover. But if your income is purely foreign source, your personal tax rate is a flat 0.312. One important nuance for 2026. Georgia has signed the CRS Multilateral Competent Authority Agreement, so automatic financial reporting does apply. However, Georgia's list of reciprocating partner jurisdictions remains limited compared to EU member states, which means the practical reporting exposure is narrower, but it is not a CRS-free environment, and you should plan accordingly. As we approach 2027, Georgia is positioning itself as the primary alternative to the now expensive Portuguese NHR program, which was heavily restricted in 2024. Finally, the United Arab Emirates offers the most robust zero-tax environment in the world for high-earning nomads in 2026. By setting up a free zone company, you grant yourself UAE residency, which translates to 0% personal income tax on everything. While the UAE introduced a 9% corporate tax in 2023, many small nomad-led companies still qualify for exemptions. For high earners making $200,000 or more, the $5,000 annual setup cost is a rounding error compared to the tax savings. It is the ultimate hub for those who need world-class banking, global connectivity, and airtight legal clarity, heading into an unpredictable 2027-16. You now have 7 specific jurisdictions where your remote income is treated with the respect it deserves. But a tax-free country is useless if your banking setup is still vulnerable to closures or high fees. In my next video, I am revealing the 3 offshore LLC structures that cost under $500 to set up and are fully compatible with these territorial rules. Subscribe so you do not miss that. And if this saved you money today, hitting like helps more nomads find this channel. See you in the next one.